Let's get across the market open now. Mark Gardner joining us from MPC Markets. Mark, happy Monday. So, the confusion, it just got greater because it's on, it's off. Certainly as far as these exemptions supposedly on Chinese-made electronics into the States, what are you interpreting at the moment?
I don't think you can interpret because you've got three odd people from the same administration saying different things. So overall, I think the tariff panic now is largely probably passed in many aspects because Trump's been forced to walk it back, and any sort of walk back, realistically, now it's just probably more about saving face. I think the high volatility last week really cleaned out any significant longs or shorts, obviously because we pretty much had a year's worth of movement in 4 or 5 days. Essentially, I think we were down 11, up 10, down up 13. It was a very very volatile week overall. So I dare say that there's any significant sort of longs or shorts, realistically, at some stage you would have been washed out. So therefore there won't be as much sort of panic to the downside. I really do probably see the risk now is as things get wound back a little bit, is probably we start to have a little bit of a 4 to 5 week rally. And then I think the Doge job cuts will start to come through potentially in the next employment numbers in the States in about 4 weeks' time. CPI numbers in about 5 weeks' time will start to show some of these tariff increases as well. And then I think the concern will start to be around probably stagflation or a softening economy. We could have some stronger than expected retail sales numbers in the States as consumers are rushing to buy electronics, laptops, iPhones, etc. And apparently things like baby seats and stuff like that. So the numbers will be a little bit, all over the shop for probably the next month or two. But we had US earnings. We had some of the banks on Friday night. They rallied and on the back of the fact that the earnings will probably settle things down a little bit because they're obviously 3 months retrospective. And I think analysts will be far more dour given the volatility last week. So they'll probably be a very consistent beat across the board, and some fairly measured comments out of most of the companies, I would imagine. But I don't think they'll be as bad as what the analysts expect after they've been rattled by Trump this week or last week.
Yeah, it's going to be fascinating to see what's to come, certainly as far as any guidance. You'd be a brave company, wouldn't you, to forecast anything at this point, particularly, we've seen inflation expectations from the consumer. Highest level since 1981. It's just extraordinary.
Yeah.
Also, those S&P earnings growth now expected to be about 8% for the quarter. Analysts winding that back from the 12% expected at the beginning of the year.
Yeah, but the earnings results that are going to come out probably aren't in that. And as well, I believe that a lot of companies will be forgiven for not giving too much guidance as well. So overall, I probably see this will be a little bit of a short squeeze rally. I think I don't think this is necessarily over, but I think the next 4 weeks we'll see Trump gradually pull back tariffs a little bit, and then the company earnings add a little bit of positivity. And what you don't want to be doing is buying sort of towards the end of this month and early next month if this does grind higher, because that'll be probably a fairly large trap, because these sorts of moves don't tend to just disappear overall. We expect some form of volatility or softness in the market probably until anywhere around the July-August area is a historical average. So, but if you play it smart, these bear markets or correction markets are very good opportunities. So you just got to be patient, not get caught in the hype like last week, which was very hard to, because that was the first phase. You probably don't want to get caught. If you want to buy, you probably want to be buying today or tomorrow rather than down the line once you think the dust has settled, because I do believe that this won't be the last of it. This has really sucked the confidence out of the US dollar and sucked the confidence out of investors. So I can't see us rallying back to record highs, but it may feel like it in a few weeks' time once everything settles down.
All right, so you're seeing a buying opportunity right now then. Obviously, you're in a decent position because you've got elevated levels of cash.
Yeah, so probably didn't allocate quite as much as we would like last week, but we still managed to get some CSL or Goodman's, Macquarie, some WiseTech. So, and some of the index long, but the I think we'll probably add small portions of that again as early this week, and then we'll probably just sit and wait and see what happens over the course of the next month. We've got a high level of gold miners as well. The gold miners were up significantly on Friday night. I think we probably already had about 4% priced in with Newmont, but it was up 8% on Friday night. I think you'll probably start to see those guys play catch up because the US dollar's weakening, and out of a fair dent to the administration's made a fair dent to the confidence in the US and their policymakers. So I would expect gold to probably continue to drift higher, but the miners will really be printing cash if gold stays around here for the next the next year or two, essentially. So I think there's still some significant value there.
How are you treating the copper miners at the moment? That's been a difficult space, obviously. Some sharp falls there, but we saw another jump on Friday there. But clearly that's a barometer for global growth, which is looking negative.
That's going to be a really noisy trade. I'm happy to be buying copper miners here at the minute. We've got a fairly long-term structured investment in that because we knew this was going to be a fairly noisy trade. I don't think the AI thematic, that's one of the reasons we were looking at Goodman last week, obviously traded a high of $40 and it's fallen back to $25 with a massive cap raise at about $31 or $31.50. Which was received very well, is that AI thematic's not going to go away. I mean, whether they build them in the US or whether they build them in Europe or Asia, they're still going to build them. So that thematic is not going away, and it's coming at a rapid pace. So I think that trade, probably less noisy than uranium. That's just been volatile beyond belief. So I think the copper miners, I think there's probably some value in BHP down here as it stands at the moment. And I think it was a positive sign that China reached out to us because I think they're obviously aware that they still need our minerals. And I think that will still be a decent play. However, it's going to be a noisy trade, so probably put in smaller allocations than you would in buying some of those really good names like your CSL, Macquarie and Goodman's, etc. because there'll be a really good long-term, there'll be really good long-term buys over the next couple of years.